We've had Brent crude recouping some losses today after plunging the most in, nearly 3 months in yesterday's session. Exerting pressure has been, of course, fears around global economic growth. What's your assessment of the demand scenario we face?
I think that the weak economic growth will, of course, reduce oil demand. And in fact, what I have in my forecast, it's a growth in oil demand of close to 0.7 million barrels per day in 2011, rebounding to 1.2 million barrels per day in 2012. And that is to compare with a growth of 2.7 million barrels per day in 2010. So that will be very weak growth in the coming quarter.
While that's one factor to consider when you're looking at what to expect on the price front from here on out, the other factor to consider is the supply constraints we're facing. And there's lots of concern on the back of tensions out of the Middle East with Iran and threats to, key shipping lanes having resulted in oil. That oil price already having gotten some support, Christophe. So how's that tipping the scales?
Yeah, it is true that we have some support in prices from geopolitical risk, and in particular from what's happening in Iran. Iran is a very big producer. Iran produces 3.5 million barrels per day of oil, and we cannot afford to lose this amount of oil in the market. Well, it will be very difficult to accommodate. But on the other hand, what you have right now, it's a fast resumption in Libyan production. And the latest data that we have, Libya is currently producing close to 900 kbd, which is roughly half of what the country was producing before the war. So that will be at play in the coming quarters.
Of course, just this week we had OPEC agreeing to set a new output target of 30 million barrels per day, and we've seen the absence of action from that meeting to trim output in case, we see oil demand growing slower than expected. To what extent is that throwing a spanner in the works at this stage?
The agreement reached was on a total global production of 30 million barrels per day. And what is strange in this agreement is that there is no description on how the organization, how the members of the organization other than Libya will accommodate the return of Libyan production. What will happen? Since June, Saudi Arabia, Kuwait and the UAE have increased a lot their production. What will happen if this country have to reduce production? Will they go back to the June level? Will they reduce production proportionally to their current production? We don't know. So basically the agreement, I think, remains very vague.
Yeah, but it remains vague. How are you assessing, the various commitments being made by the members within that body? Because certainly from Iran and with tensions over its nuclear program, it's reflecting a growing isolation of the Islamic Republic as major powers try to isolate that country, Christophe.
Yeah, but there is some isolation of Iran, but on the other hand, it was an agreement, and basically compared to the meeting that they had in June, which ended up with just no agreement at all and no quota, it's a progress. It's clearly something positive for OPEC.
Okay, so let's take a look at the trading range that you've got pegged out for this oil price as we move into 2012.
For 2012, we have Brent prices going down to $93 per barrel on average, and what we'll have, it's a progressive decline in prices, and we have prices going back to $85 per barrel in the fourth quarter of the year.